Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. Can Bitcoin go to zero? And the answer is that it is possible. But it's also possible that it could go to 10,000, 20,000 or more. The truth is, no one knows. There's many people out there making predictions, but no one has a crystal ball. No one knows where the price of Bitcoin will go. There's a lot of prediction models that are no longer valid. Up until March of 2020, they held true, but with the recent crash in Bitcoin and in the crypto market, a lot of these models are no longer valid. Some models are still in place, such as Plan B's stock to flow model, but again, if Bitcoin can't hold at critical levels, this model also will no longer be valid. There are many people in the crypto space, optimists who believe in Bitcoin, who believe that one day it will reach prices of 20,000, 30, 50, 100,000, who also have predicted without using a model that Bitcoin would crash before it would ever rise again. Now, these predictions are not based off of financial models. These are based off of reasoning, which I'm going to explain. So Eric Voorhees, who is a big player in the crypto space, he predicted back in February 18, and if you're following the news, a lot has changed from February 18th, 2020 to now, March of 2020. A lot of things that really no one could have predicted. And back in February, he predicted that within 5 years, there will be a major financial meltdown and crypto will be ready. And this is kind of what's going on right now. This is what he was talking about. And then Jeff Berwick from the Dollar Vigilante, he predicted back in January that if a crisis were to begin, he could easily see the crypto market dropping below $150 billion. And that is exactly what happened in March of 2020. And he did mention that before Bitcoin would ever go to its highs, it would reach closer to a level of $4,000. And March of 2020 today, it is the 15th, Bitcoin's at around $5,000, $5,300. So these predictions are coming true. And then Andreas Antonopoulos, who is also a very big player in the crypto space, explained 2 months ago why Bitcoin would crash. And he said, quote, "The reason it will crash is because a lot of venture capital, corporate investments, and private investments from individuals that is based on cheap money and disposable income and excess cash in portfolios, like in any other part of the economy, will dry up. Because these companies, these institutions, they need to liquidate. They need money." We asked for institutional investors to get involved in crypto, and that's exactly what happened. But sometimes we have to be careful what we wish for. So crypto markets now have a lot of financial institutions and player in the space. And with what's going on now in March of 2020, these financial institutions, these banks, they need money. They need liquid cash. So they're going to sell all their investments. And that's why we saw all stocks have gone down, all crypto has gone down. So this is what's going on in the moment. Now, the reason that Bitcoin was created in the first place was because of meltdowns, of financial breakdowns. And that was in 2008 after the stock market crash and the recession of the whole economy. That is when Satoshi Nakamoto released the white paper for Bitcoin, which was really to counter the effects of the way the economy works now. But the problem is Bitcoin has been successful since 2008 because it never had to experience any hard times. We just went through the longest bull market in history. So of course everything goes up, meaning cryptocurrency and Bitcoin will go up as well. So this is the real test. This is what Bitcoin was made for. With everything going on in the market right now, businesses are closing down, the stock market is down, and people are in a panic. This is exactly why Bitcoin was created. So this is the real test. Bitcoin never really had a test until now, March of 2020, and likely moving forward for at least the next 3 to 6 months will be the real test of Bitcoin. Will it actually do what it was intended to do, what it was created for? So this is the issue that Bitcoin was trying to address. Over pretty much ever since the invention of fiat money and over the past 10 years, governments, they print money on demand, they inject money into the economy when they need it. And this has helped to keep the economy propped up, but eventually it will break. With what's going on right now in the world though, governments are continuing to inject money into the economy. So the Federal Reserve is injecting $1.5 trillion into the US economy. And you could make the case that maybe this is necessary because now we're talking about people's lives on the line. And you need to add money to the economy to aid people. But regardless of whether the injection of money is necessary or not, the bottom line is, in the end of the day, there's more money being added to the economy. Now, the USA is not the only country doing this. China also plans to inject 174 billion of liquidity into their markets, and Europe as well, $135 billion injection from the European Central Bank. So all of these governments, countries are adding money to their economy. And hopefully this will help. Hopefully this will help to get through these tough times and help save lives. But the bottom line, in the end of the day, is that when more money is injected, this is what causes hyperinflation. This is what causes the current money supply to lose its value. There's no way around it. And it's the same for anything. Whenever you have any item, any asset, any good, whenever there's more available, of course it makes the current supply less valuable. And this is what's going on right now with cash in the world. The immediate effects, though, you won't see them. Hopefully, in the immediate return, it will be beneficial. It will help us. But after everything settles, whenever that is, or whenever that is, that's when you start to see the effects. When countries and banks inject money into the economy, it's just a band-aid. It's just covering up, holding it together. But it's not actually fixing the problem. Eventually, it all breaks down. And now this is the problem that Bitcoin is facing. So right now, Bitcoin is being put to the test. This is what it was made for. It's crashing right now, as people have predicted, because in times of distress, people will sell all their assets for cash. But after it all settles down and inflation sets in, whether that is in America or China or other parts of the world, that's when people will start to see the effects. Now, the problem that Bitcoin is facing is that it's barely profitable to mine at the time. Bitcoin, the basic infrastructure, what makes it so valuable, are the miners on the network that keep it safe, that keep it decentralized. And they have to spend money to make money. So they have to spend money on computer hardware and electricity in order to mine on the network and get Bitcoin in return so that it's profitable. So at the moment, even with this market crash, at Bitcoin trading at about $5,000, between $5,000-$6,000, it's still profitable. A lot of places in the world where electricity is cheap, people are still making money. Now, the biggest threat that Bitcoin is facing now is that the halvening is in 57 days. Now, the halvening means, well, right now, when you mine Bitcoin successfully on the network, you're making sure that the network is valid, you get rewarded. So the reward right now for mining a block is 12.5 Bitcoin. And in 57 days, when the halvening occurs, no longer will the reward be 12.5 Bitcoin. It's going to be 6.25 Bitcoin. So in other words, the reward will be less. It's assumed that as time moves on, because the price of Bitcoin will increase, even though the reward will decrease, people will still make money. But the issue is that the price of Bitcoin now is kind of low compared to what it was, over the past year. And when the halvening comes, the reward will be decreased. So will people still want to mine on the Bitcoin network if they're not able to make money? At the moment, there's about 10,347 nodes around the world, and people are still mining, making sure Bitcoin is secure because they get rewarded for it. But after the halvening, if the price of Bitcoin is, say, $1,000 or $2,000, it no longer will be profitable for people to mine Bitcoin, so miners will leave the network. Now, this isn't such a problem, and the reason it's not such a problem is because as people leave, the difficulty level or the hash rate will decrease. So Bitcoin has, this whole psychology behind it. It's kind of amazing that as more people enter the network, it starts to become more expensive and the price of the token increases, and more people jump in, make it more secure, and this raises the difficulty level or the amount of energy, for example, that you need to use or pay for to mine Bitcoin. But as people start to leave the network, that difficulty level decreases. And as it decreases, of course, then it becomes again more affordable to mine Bitcoin. So it's self-regulating. So let's say, for example, after the halving, the price of Bitcoin is $1,000 or $2,000 or $500, who knows? Then people will leave the network, miners will leave. And as they leave, there'll be less nodes on the network. And the price to mine Bitcoin will become cheaper. So then people will start mining it again, and then eventually it'll become profitable, and it's self-regulating. So that's the real test for Bitcoin right now, whether it will go to zero or whether it will go to $100,000. We don't exactly know. We don't have a crystal ball, but Bitcoin was created out of the 2008 recession. It's only experienced good times since, and now in March of 2020 and likely moving forward, it will really have to be put to the test. And as I mentioned in the beginning of the video, no one knows how this will play out, so it's just important for everyone to do their homework, study up every day, follow the news, and make the best decisions that they can. I hope that you found value in today's video. Please go down below and subscribe to the channel. Show your love. Thank you for listening, and I'll see you next time.